Hello, Oracles. Today we're going to discuss three stocks, and of course, there's plenty more out there, but three stocks that could potentially dominate the market over the next 10 years. Tomorrow, we have the Jackson Hole Symposium wrapping up. We've got Jerome Powell, who's going to give his speech, and it's going to hopefully give us some clarity as to what we're going to be seeing for rate cuts coming in the September meeting and potentially for the rest of the year. Sounds like they're still going data point to data point, but we might get a little bit more clarity tomorrow as far as at least the September meeting and where that's going to go. Sounds like the Fed's probably going to unravel these rate cuts a little bit slower than the market may have expected, but we're also expecting potentially 6 rate cuts through March. So the market is expecting more, but it sounds like the Fed's going to do this slower. Market's not going to like that. Things that's going to happen is the market is already pricing in these 6 rate cuts. So there's not very much upside unless the Fed's going to do more than that. Problem is, if the Fed's going to end up doing more than that, it's probably because we're going to be seeing some uncertain economic times, and that's not good either. That's not good for the market. So where we're at right now with the election coming up, I don't know what we're going to see for further upside, but I know that there could be potentially a lot more downside from when we're going. We might get a sell the news situation when we actually get that rate cut that comes out in September. So this is kind of where my mindset is right now. And I thought about it, I was like, if we end up getting a soft landing, that's awesome. The data right now isn't really pointing to that for the most part. So if we're going to potentially brace ourselves for maybe a recession or at least some slower economic times over the next year to year and a half, what can we do to prepare for that? So let's say we do get a soft landing. That doesn't mean that we're going to have a booming market. A soft landing still means that the Fed has slowed the economy down, but we didn't hit a recession. It still slowed the economy down, though. So we could potentially see a compressed stock market. That gives us great buying opportunities for the next 2 to 3 years, most likely. Think back to when we had the great financial crisis. We had a good 3 to 4 years of buying before the market really took off after that. So I'm not saying that that's what we're going to see this time around, but when we're going through this rate cutting cycle, chances are we're going to be seeing something like that for the next 18 months to 2 years minimum. So with that said, that tells me that buying times in a market that's going to be kind of turbulent are going to be prime right now. So again, you go back to what Warren Buffett says, where he says, fortunes are born during bear markets. So even if we don't hit a bear market, we're still in a slower market. These would be times to buy. So I'm not saying go and dump money in right now, because if we do get a recession, we could have a lot better buying times coming up. That's kind of what I'm anticipating. That's what my opinion is on this, but I could be entirely wrong. So what I'm taking a look at, though, is if we are going to go into these times, let's look past this, because historically we always get through it and we always look back and say, darn, I wish I bought more during those times. So now I'm going to take a look today at 3 stocks that could be amazing buys during these times that could really look into the future, and we can look back and say, man, I'm glad I bought more during those times. So we're going to take a look at those 3 stocks now. All right, the first company we're going to be looking at is Amazon. Everybody out there, well, I would hope everybody out there knows about Amazon. Amazon is the leading online retailer in the world. They are looking at numbers that are far beyond anybody's imaginations. Amazon is tracking to hit $1 trillion in revenue on an annual basis. Not there yet, but they're going to get there over the next 10 years. Those numbers are incredible. Now, when we've talked about dividends before, and I've spoken about this previously, you look at the fact that Amazon doesn't pay dividends right now, but neither did Google, and they just started paying dividends. Neither did Meta. They just started paying dividends. It's only a matter of time before Amazon is going to be paying dividends as well. So not only are you going to get some amazing growth out of Amazon over the next 10 years, not just from the retail side, but AWS is growing significantly also, and they will be able to capitalize on AI as well. They are going to be growing much larger than many other companies that are out there. I think for me, they are one of those big sleeper companies in the Magnificent Seven that are going to take off a lot more than the rest. So they're going to take off. They're going to potentially pay dividends in the future. Again, I have no doubt that they will within the next 10 years. So that's going to be a nice little added bonus on top of this. So if we do get into these deeper economic times, people will probably still shop on Amazon, just because Amazon a lot of times has some of the lowest prices. So while they may end up seeing revenues come down because shopping in general would end up coming down, they would most likely outpace a lot of other retailers out there. They're also primed to take over any other companies that are out there. They have spoken in the past about getting into brick and mortar stores. Don't know if they would actually end up going that route. However, they would be out there to be able to, kind of crush other competition. If we hit a recession, companies may end up going under. So you have more retailers going bankrupt. That opens the door for Amazon to take even more of the profits that are out there. So Amazon is primed perfectly to go through this. If we hit a recession, we could see lower numbers from revenues from Amazon. But as we end up coming out of it, their numbers will grow significantly more than everybody else's. And I think they're going to be one of those companies similar to an Apple coming out of the great financial crisis that are just going to take off and be one of those companies that you're like, dang, I wish I bought more back then. So I think that's what we're going to see from Amazon over the next 10 years. And Amazon right now is trading at $176.13 at the close today. There's a little bit of a gap down below us here at 172.28. Again, looking out 10 years, I'm not concerned about any gaps that we see right now. August typically is a lower volume month in the market historically. So, we saw this giant gap down when we had that August 5th scare. It has now come up to fill that gap entirely. So who knows what's going to happen with the market? Looking at this as one of those Magnificent Seven stocks, we might start to see this pulling down. Again, we saw a 2% drop today, anticipating what's going to happen with Jerome Powell's speech tomorrow. Don't know what's going to happen, but again, this is just very near term. Looking out 10 years, a $176 price tag could be outstanding. Maybe we get better deals over the next 2 years. Maybe we don't. You guys can let me know your thoughts in the comments below if you think Amazon is a buy right now. All right, next on the list is SOFI. Now, SOFI is one of those kind of in-between plays. It's a smaller cap stock, and it's one of those, I don't know, if it's going to weather the storm, I think it's going to come out one of the strongest plays on the other side of this with the ability to give you some really big gains. Right now it's trading at 719. It's basically been trading sideways for the last year. Hasn't really gone anywhere. Down 1.5% today as the entire market pulled down. But to me, this has been kind of consolidating, just waiting to see what's going on. It's kind of what's been happening with a lot of the small cap stocks, big violent moves here and there, but then still just leveling off around the same area. So I've been accumulating a bunch more. My cost basis on this is $7.84. And I just plan on, kind of watching it and accumulating more as we go, as I anticipate what we see the Fed do with the rate cuts. And quite honestly, SoFi might be one of those gamble plays. And to me, it's a smaller portion of my portfolio as it doesn't pay dividends. And I'm really not sure what's going to happen if we do get into a deeper recession. Is SoFi going to be able to weather the storm? Personally, I think they will. Now, with SoFi, they're not like one of those giant banks. They're just an online financial institution, but they offer a lot of different products and they cater to the younger generations, typically millennials and younger. So they don't have a lot of old big money that's in there. They're kind of catering to a younger generation to be able to build into one of those larger ones in the future, kind of taking on everybody's financial needs all in one place. Some bigger banks do that, but some don't. For instance, I have my personal local bank, which I've been kind of slowly getting out of and putting more money into SoFi. I am a SoFi user myself. Absolutely love the platform. It's amazing. If you guys are interested, I do have a link down below. I get $75, you get $25. I'll go over SoFi a little more in depth in the future because I absolutely love the platform. And from a company perspective, to be an owner of the company, I like it as well. I do a significant portion of my investing through there. And because of the way their banking operates, it makes everything very simple for me to be able to put money aside and pay off different bills. And I'm getting that 4.6% interest right now in my savings. So right now, the money I'm putting aside for both my son's college and my mortgage, I'm getting paid interest on just by having the money in there. So the mortgage, I'm getting like $10 a month. Not a lot, but I'm getting $10 a month just by having the money I put aside to pay my mortgage in my savings account there. For my son's college, I'm getting about $50 every single month. It's kind of ridiculous I'm getting paid to have money just sitting around to pay off my bills. So the money that's paying off my bills is paying me money as well. Now, granted, when the Fed starts to cut rates, that rate will come down, but it's still there and it's nice to have, which is way better than my personal local bank, which just charged me $3 for my savings account because I didn't have over $100 in there. So silly. So I'm kind of taking all of my money out because why would I pay savings when I can get paid to have savings? So that's where I'm at right now with SoFi as a consumer. So then looking at the stock performance itself and the way the company operates and what it's going to be doing for the future really tells me that they are kind of like the next generation. This is where the future of banking is going. And I think SoFi is going to be one of those leaders in that field when it comes to fintech, because they have the total package over there and they're only going to get better as time goes on. So for me, I love SoFi as a company. And again, I think they're in one of those positions where they're kind of rolling with a lot of the smaller caps, which really haven't done very well over the last 5 years. But as we get kind of through the tougher economic times that we have in front of us, if SoFi is going to survive this, I think they're going to be one of those companies and one of those stocks that could potentially give you some of the greatest returns you're going to see. Let's say we hit a deeper economic time. Let's say SoFi pulls down under $5, maybe even lower because it's so rough. But then we do get through this. SoFi could push to $20, $30 within a couple of years. That's going to be a 5x of your money within a few years. That's kind of where I'm looking at it right now. And then going from there down the road, I think they're going to also be a company that's going to be paying dividends. Just like pretty much every bank that's out there, they pay dividends. That's what a lot of these financial institutions do. I think SoFi will be no different. So being able to accumulate a lot of shares at this time right now is going to be very advantageous. Sort of like buying one of those, like a Bank of America or a JP Morgan back in like the 70s and 80s. They're going to grow. They're going to split their stock several times. They're going to be paying out dividends. Could be one of those companies that 10, 15, 20 years down the road, you are grateful you have. You might be able to retire because SoFi had done so well. And it could be one of those reasons that made your portfolio grow as much as it did. That's my view on SoFi stock. And again, I'm going to do a deeper dive into it from a consumer perspective in the future, just because I love the platform so much and I really utilize it to keep all of my budget in line. And this is what's keeping me in a position to be able to pay off my bills faster and be able to have more money on the sidelines to invest into the stock market. SoFi has been a big component of that for me, and I want to share that with you guys. Again, if you guys want to check it out, I have my link down below in the comments. All right, last but not least, my favorite stock that I think we're going to be having over the next 10 years is going to be Tesla. Now, again, we have this gap that goes up here to 245 above us. Whether we're going to fill that or not anytime soon, don't know. Again, over the next 10 years, we absolutely will fill it, in my opinion. We still have that gap up to 290. We're going to fill that as well, most likely, in my opinion. I think Tesla is priming themselves, and I've said it many times before, they are priming themselves to be one of those companies that's going to encompass so many areas of the world, so many areas of our lives in the future, that they're going to just grow immensely. Elon himself said, and you guys can believe what he says or not, of course, he's just throwing out his opinion, that Tesla is going to be more valuable than Apple and Saudi Aramco combined. Again, I don't know if that's ever going to happen. But personally, I think that they're going to grow faster and bigger and larger than any other company that we can see over the next 10 years. They're going to have that compact car coming out next year. I think it's going to add to the next giant growth wave when it comes to their EV sector of the company. Energy, I think by the end of the decade, might actually eclipse EVs. We'll see how that grows, but I think they have great potential there. Then they're also going to have, obviously, AI, FSD, and robotaxis, which are going to come in as well. Robotaxis could end up being larger than energy. Who knows how that's going to go? But I think robotaxi revenue and energy revenue are both going to eclipse EV revenue. And then we've got Optimus. Optimus is coming along faster than I thought it would. How quickly we're actually going to get to a point where, Elon says that it's going to just completely, encompass every other sector of their business. That I don't know. I don't know if we're going to see that number happen in the next 10 years. I think we're going to see some great improvements from Optimus in the next 10 years. But again, when you look even past 10 years, that's where I think Optimus is really going to take over. But even the next 10 years between FSD, robotaxis, energy, and the EVs with the compact car coming out, Tesla, I think, is going to be the best positioned company over the next 10 years. Now, some people can argue NVIDIA, but I think NVIDIA is going to hit that kind of wall in the next 3 to 4 years where, the chips are going to be growing, but they're not going to be improving exponentially well. So their companies may be like, you know what? I don't need to spend as much money on the next generation because it's not going to make that much of a great improvement. Similar to what we've seen with the iPhone. iPhones made some great incremental improvements early on, but now every year it's just kind of like slight little improvements, maybe a little bit bigger phone. I used to go every other year and buy an iPhone. Now I can go like 5, 6, 7 years before I buy the next generation because the one that I have right now is phenomenal. I don't need another one. And the next step up isn't all that much better for me. So I really don't need it. I think a lot of consumers go that route as well. I think that's what we're going to end up seeing with NVIDIA. So that's my argument to say that Tesla could eclipse NVIDIA and become that company. And NVIDIA is going to kind of hit that wall in the next 3 to 4 years. Tesla, on the other hand, is going to have the EVs. And while their EVs, especially after the compact car comes out, may have those incremental jumps, they still have energy on the back half. They've got robo-taxis, which are really going to take off. And then they're going to have Optimus, that's going to be the next stepping stone after that. So I think Tesla really is going to grow. And when it comes to dividends, I think Tesla is going to inevitably pay those as well. Tesla might be more than 10 years before they pay those. But again, having that opportunity to accumulate shares in the next 2 to 3 years before the compact car itself really starts to take off is going to build up a nice little pile of shares underneath. And I think Tesla is going to split several more times in the future. Don't know when, don't know timing, maybe one more time before the end of the decade. Kind of depends how the next 2 to 3 years go, but lots of potential, I think, behind Tesla stock and everything they have going for the company. So there it is. There's 3 stocks that I think are primed to have some of the best results in the next 10 years. You guys can let me know your thoughts in the comments below what you feel about those 3 stocks. Are you owners of them? Do you think there's other stocks that are out there that could possibly outperform these 3? Let me know your thoughts in the comments below. I'm always open to taking a look at new things. I have a much larger portfolio, obviously, than just these 3 stocks, but I think these 3 are primed to do some of the best in the next 10 years. Thank you guys so much for watching. I appreciate all of your support. Have a great one.